So today's question is, can I afford to buy a home, and what are the costs that comes along with home ownership, right? So number one is going to be the mortgage. So when you buy a property, so if you're not buying it cash, you're going to get a finance, right? You're going to get a mortgage. What the mortgage consists of is the principal amount, right? How much you borrowed, all right? The purchase price minus the down payment, that is your principal, and then the interest that you're going to be paying on top of that. Generally, within the first few years of the mortgage payments, you're going to be paying more interest than principal, right? And you can look at the schedule of how much you're actually paying. Up next is property taxes. Taxes are not based on the purchase price; they are based on the assessment price of the property, right? So the city every year is going to assess the property. They say, okay, this property is worth X amount, and for that reason, we're going to tax you this amount, right? And you can look at, because it's all public record, so you can take a look at how much the tax is going to be on a property. Up next is home insurance. There are different types of insurances out there, so it's best to talk to different agents that can then provide you with the best quote and the best kind of coverage that you will want on your property, and also to fit the monthly budget. Up next is private mortgage insurance. So the only time you pay for PMI is if you do a down payment of less than 20%. And what that PMI stands for is basically, because you're only doing less, like a small down payment, technically for the bank it is a riskier investment. So the PMI, the private mortgage insurance, is then to insure the lender in case you were to default on the loan. This is why it's important to understand what is my monthly budget that I'm looking to purchase for a property, so that way you don't have to default on the loan, right? PMI can then be removed once you reach a certain amount of principal, right? So generally, when you have 20% equity into the property after your payments, the PMI then disappears and your monthly payment is going to be less. Lastly is homeowners association fees. These we tend to see in condos as well. Condos tend to have the condo association fees along with it. What this fee does is basically for the maintenance of all the properties, or let's say if it's a condo in a building, for the maintenance of the property, and also to improve the property throughout the time. So let's say if you're in a residential area, right, a bunch of single family homes, this is going to go to making sure that the lawns are right, that the streets are good. Condo fees, you could then be able to see where those dollars are being allocated in the condo fees. So now, with all these different types of costs that it comes to owning a property, what you want to do is you want to be able to assess a monthly budget that you have, so that way, let me spell the right thing. That way, when you're looking out and shopping for homes, all of these costs, if you're going to have PMI, if you're going to have HOA fees, are going to fit within the monthly budget that you have when you're purchasing homes. Your agent should be able to say, okay, based on the interest rates that's going on right now, the purchase price, the down payment, the taxes of the property, insurance quotes, you should be able to see a payment of this amount. And there you have it. These are all the costs that it comes with home ownership.